The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. Basically flat on the S&Ps, but man, do we have a lot of volume. 2.6 billion shares already as we start this show.
The following takes place between 2 p.m. and 3 p.m.
And yeah, got a little bit of up and a little bit of down, but man, they threw everything at this market at the open and it started to roll. We'll get into why I suspect it has, even though the earnings, for the most part, were fairly good. We'll get into the earnings and then, of course, talk a little bit about the big tech companies reporting after the bell tonight, jobs numbers in the morning. But I think we've already got some writing on the walls, and that is there's always a few people that leave the party a little early, give you a little hint that it's about ready to come to the close, and I think we're seeing that in that Russell 2000. We've got some other things going on, but for the moment, what do we have? Kind of a market that I suspect that they're holding up here for a couple of reasons. We'll talk about those reasons. And what else? I think that's about it. We got to get this party started.
And it's all just a little bit of history repeating.
And it is on this day in 1978, the Full Employment and Balanced Growth Act of 1978 is signed into law by President Jimmy Carter, also known as the Humphrey-Hawkins Act. Its sponsors, the law requires the Federal Reserve Board to take unemployment and inflation into account as it sets interest rates. It also requires the Fed chairman to testify before Congress twice a year, subjecting the public to some of the most stupefyingly boring speeches of all time, launching a thing called Fed Speak. And what is Fed Speak? That's gibberish so that you don't have to tell people really what's going on. Because, of course, like aliens, if you told them they existed, everybody would riot. At least that's what they tell us that would happen. No one's told us about aliens, and no one's told us the truth at the Fed either, that we are just sheeple following the brightest and the most anointed. Just lucky we can put our pants on in the morning. Yesterday, Dave from Rochester called about Apple. I hope he calls back in today. I didn't. I had a bunch of stuff up here, and somehow I parked a bunch of the stuff on the instant messenger, so I didn't see that you had called. So, Dave from Rochester, call in. I have my windows open today. More than two ways. I had my windows open before the show started. It's a nice day down here in Florida. Other things going on out here, according to the Investment Company Institute, the ICI, the all-knowing ICI, if you know them, tracks data. Domestic equity mutual funds saw an estimated net outflow of 16.3 billion shares in the week. I'm saying week ending 10/19. Said that from Bespoke, which is a investment analyst firm. While mutual flow outflows are nothing new as ETFs have gained in popularity, last week's outflow was the single largest exodus from mutual funds since August of 2011. My belief on this, if you look at that and housing numbers, is that a lot of people are thinking it's time to cash in those mutual funds, not put them back into the stock market, but actually to put them in the housing, as most people just can't help but buying at highs. I suspect that from the numbers I looked at in housing and the actual reaction, that they're probably selling just in time to go buy houses as the houses start heading back down for a little while. Just bad timing for the public is just kind of built in, isn't it? Anyway, from some of the numbers I'm seeing over the last few months in housing, it just looks like people couldn't wait to buy houses at highs. And we'll see how that works out. But the outflows are certainly large. Some of that money is getting back in, but I just see a lot of it leaving for what people think are more tangible assets, gold, silver, other things, anything that they can put their hands on that maybe the almighty government can't take away from them easily. Other things going on here. Google is out after the bell. I've been quite worried about Google's foray into politics, i.e. with half the country thinking that maybe they won't agree with Google's politics. Google has more than once been caught with its hands in the cookie jar. It did again well over the last 2 days. We can see how the people that, of course, rule our world, the appointed ones, the elites, mostly living in very large cities on the West and East Coast, know much better than we do what we should do with our lives. Well, Google got caught with doctoring the terms of agreement for one Danny Williams. He claims to be the son of a former president. They terminated his account when he basically did nothing that would violate the terms of what he did. They just didn't like it. My guess is that somebody on some campaign called up and said, hey, you got to do something about this. We don't like this. Take it down. Run it down. And the whole idea of social networking, and I guess YouTube is kind of a social network, but if you don't tell somebody that they should go and hurt somebody, you don't use any foul words, if you just ask something, I guess the people that you're asking it of could sue you and say, hey, that's not true. They can ignore it. But is it Google's job to get knee-deep in the muck of an election and then, of course, make it worse? They can't lie their way out of what they did, so they have to put the account back on. I'm not so interested in this guy particularly, but it is the question of whether or not you would go to a supermarket, and does this not open up a huge can of worms, i.e. for companies that are doing things like YouTube, like Vimeo and other accounts. It just seems to me like when you're in the lead, you probably want to do everything to stay in the lead. YouTube is a great resource. I watch it a lot. But the question is, what do you do when companies become adjuncts to political campaigns on either side? Is that what companies, especially companies that have virtual monopolies like Google, both in YouTube and its search engine, they've been caught manipulating search results too on this. I'm just looking at this. I don't see a lot in the chart. We'll look at it a little bit. But it makes me start to think that these guys have far too much time on their hands. They need to get back to making products that people want to buy instead of trying to go all Joseph Goebbels on the news. But we shall return in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And yeah, we've got a lot of stuff going on out here. The spin question is the spin on Tesla earnings per share report is breathtaking. And you get the kind of stuff that is and seems almost desperate, but that is interesting. We'll talk about it later in the show. Let me go through Tesla and look and see how it's reacted today. And let's see what else we got. Oh, I need to do this real quick. Hang on just a second. Should have done it during the break, but I forgot about it. I just need to get this up. There we go. Okay, now I'm back. Anyway, back to news going on. Of course, Apple, what's the latest quote out here? 115.12. It's off 50 cents today. No big whoop after the news, but of course, everybody couldn't really figure out a lot what was going on in Apple. I suspect over time it is headed back to 101. In the last 18 hours, we've had two major events from Apple and Microsoft. On Microsoft's side, they showed some new laptops and some new tablet 2-in-1s and a desktop 2-in-1 they call the Studio PC. This is a product directly attacking the CAD and creative side of the market, artists, everything else. It is a all-in-one with 27-inch, a 27-inch screen with resolution that's 1-for-1 for desktop publishing and other events like that. But if you're a CAD person or you're doing video production or a bunch of other stuff, this is one that you can sit there with a pen and lean on the thing. It's very clever design, but it's really meant for people that spend 8 hours or 9 hours a day with CAD production or drawing or a lot of other stuff. The neatest thing that they showed was a part of what is now being called NUI, which is natural user interfaces. a thing that looks like a little puck, like a hockey puck. It's white. You set it down on top of a touchscreen, and you actually spin it like a dial. And when you put it on the touchscreen, it actually pops up a new interface around it. So if you're picking colors, or you want a volume level for your audio, or if you're doing a lot of other things, you can use that as a potentiometer for those people that know electronics. Pretty neat stuff. It's not something for everybody. It's going to be fairly expensive, $3,000 and higher. But a super high resolution monitor, it's really like a 6K monitor. It's not a 4K. It's about a time and a half of a 4K monitor. You cannot, without a magnifying glass, see the pixels on this thing. And it's very interesting, very high res, very high end. All the guts of it are in a little box that sits. So you have one wire that literally goes to the monitor, and that's it. Very high-end i7 processor in it, high-end NVIDIA graphics. But $3,000 to $4,000 is what this thing is going to be. But, if you're a drafts person or something like that, very interesting. Now, the other thing they pushed out was their next update will come in March. It will be called the Creators Update. And a lot of people are saying, well, the PC's dead. And I couldn't do trade without a PC, without all the different monitors. Couldn't do it on my phone alone. It's kind of like having a desk the size of, a piece of sliced bread. Could you do something on it? You probably could, but it'd be painful. I have a desk the size of a meeting desk, because that's what I bought, a meeting desk to put all my stuff on. I also have 4 monitors, 2 laptops, a phone, and what else? I got a bunch of stuff here in front of me. And it's still not enough. So it's very tough for me to see, if I'm watching a video, do I really want to watch it on my phone? The answer is no. If I was traveling, and does it keep me occupied? I guess yes. But there is this thing of content creator and content consumer. And a lot of people are confusing that really PCs in the future are for people that create and do deeper work. They all say the PC's dead. It's only dead when you don't have any more thing to create for other folks, because you're not creating anything of real value on an iPhone, as far as I can tell, other than data, so they can sell you more things. Anyway, very interesting stuff from the Microsoft folks. I'll be covering that tomorrow. MacBook showed their new MacBook products out. A lot of people were looking for a new touchscreen. The new MacBooks have that. The other thing that they were looking for is an upgrade in the keyboard part. And many of the people that have been going through there already, the reviewers, already say that they hate with a passion that keyboard. So most people are thinking it's a net negative on Apple's move. I don't know how much people thought this before Apple's earnings. It certainly didn't help it, but it's not like a big deal. But certainly looks like whoever's doing the MacBook stuff over there is not getting the most help or doing the best job out there. At a best, it is a mild upgrade. And finally, 2 years later, has the touch screen that it probably should have. But a lot of disappointed Mac fanboys out there that were hoping for something, and it still looks like the Surface Pro is still the preeminent laptop, given which operating system you want to run on it. I don't know if anybody's trying to run Apple OS on that Surface Pro. Would probably be the best of both worlds. Anyway, yet another free update for Windows 10 users in March. We'll have all these new features, and if you have a Surface device, you'll be able to use the new Surface Dial along with it. But, everybody keeps saying that the PC's dead. Walt Mossberg says it's a piece of furniture. Do I think about it a great deal? No. Do I work on it 12 hours a day? The answer is yes. So I think it all depends on what you do. But if you're watching movies, yeah, maybe a tablet's fine. But, if you're actually doing any work and getting off the couch, I suspect you're not doing it on a tablet. Maybe if you're doing it remotely. But what else? And that's it. It is a mad market. I hope you will give me a call at 877-927-6648, particularly Dave from Rochester, New York, who I missed his phone call yesterday. I'm calling you out, Dave. Give me another call. Give me another opportunity. I just missed it yesterday. Let's get into the charts and the stocks that are moving the most out here. I guess what we want to take a look at first is Google. Oh, we're going to break here. We'll come back. I don't see a lot in it right now, but we'll talk more about that when we come back in just a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we've got Alphabet set up here. You wanted to see this thing really break out with a sign of strength. And it needed about 6.7 million shares to do so. It did not on the 18th of October. So we've had a breakout without the kind of volume that you would like to see. Let's try this just a little different way. Here we go. There is a double gap coming back to about $770. That's where I suspect Google is going. It may go sideways after earnings, but my guess is that over the next week or two, this is going to be back in the $770 range. That double gap. The first one is the gap down on 422, and then the gap up on 5 million shares on the 29th of July. So we've got a nice little gap out here, but almost all these stocks seem to be coming back and filling these double gaps. And of course, the art of timing the trade charts shows these off so brilliantly that I almost broke my arm patting myself on the back. Anyway, it is and has a great little move out here. Google is a fairly transparent company when it comes to earnings. I see them getting rid of some of the stuff before this earnings cycle, and it makes me think that they're going to have trouble making earnings. That is one thing. The other thing is there's a blog slash website called Search Engine Land. It's written by Danny Sullivan, who's kind of the expert when it comes to search engines, what's going on behind the scenes in search engine land. And that's one of the ones I have on my RSS reader. I read it fairly clearly. Doesn't look like anything's really big going on at Google, and it doesn't really look like anything's really bad going on at Google. I just suspect that this thing broke out. It didn't have the kind of volume it needed to hold this, and right now, anything that's just in line probably takes it back into the trading range, and that let's call it 780 to 767 range. Looks to me like where this thing would be headed after earnings tonight. I just don't see anybody really piling into this. On Amazon, I've made this a little bit more well known. I just suspect that when earnings come out and they publish the books and show how much money they've been spending, the reason why this thing went sideways for a few years is going to come back, and that is they make very small margins, about 5 to 6%, and when they go off and spend 40 or 50 billion dollars on new planes, or actually it's not 4 or 5, it's $4 to $6 billion, excuse me, on new planes, a lot of people are going to say, yeah, you sell a ton of stuff, but you make very little money on it. How long is it going to take to get that cash back? In the past, we've seen a lot of people very gun shy about owning Amazon while they're in a spending phase. On this one, there's a giant gap that I think gets filled back to this $660 to $600 range, and it has not been tested. I suspect that could come back to it just on a spending binge, and it would still be up 100% off of where it took off when they quit the spending before. So, just a natural retrace would not be anything here on Amazon. So just keep an eye on that. I'm not waiting and predicting the end of the world on earnings. I just suspect it's on its way, along with Google and some of these others. It may take 3 or 6 months, but my guess is these things are going to be pulling back significantly in the case of Amazon. Everything is roses. The problem is the exact same thing that happened in Apple. I called peak Apple at, I don't know, I remember the date, it was September 29th. And the price was like $709 on Apple. This was before it split. Everybody kind of looked at me. But I had the same reason, and that is everybody conceivably want to buy Apple at that time was all wrong. There was absolutely nobody saying that Apple could go down. Everybody was bullish on it. No one was willing to short the thing, and that made me think that there was nobody left. Anybody that had ever thought about buying Apple had bought it at that time, and you had a huge pullback off that, whatever it was, $700 and some odd dollar high out there. But it was a September 29th, if I remember right. And it pulled back to what? A split adjusted, whatever it was. I'll have to look at it again. But same thing in Amazon. It just seems to me like every hedge fund that wanted to own it, every rube out here that decided to sell their mutual fund and get in it out at the high, just does not look like there's that much left in this stock. And of course, the other tell out here is so many people on Wall Street all screaming $1,000 on it. Makes me very worried because we've known what happened last time. Everybody screamed $1,000 on Amazon. If you weren't around, it was it basically went to 10% of that high price in 2000 when everybody was screaming the same thing. Now it's split, came back and forth and stuff. But I always worry when people start screaming incredible numbers and higher on stocks like this. You know, if it was a stock that was making 20, 25, 30% margins, I would feel a lot better. But it's making 6% or 5% margins. And even when you're doing massive amounts of business, it's very hard to take the level of spending that these guys have been on. Now, on their books, will the airlines, where their own airplanes be leased, will they be able to make it look like they're not spending that money? It will, but it's always a balloon payment down the line. So we'll take a look at that. Now, a comment in the den about Tesla and the super spin in the media on it. My guess is that Tesla has been under a huge distribution since this high of 269.34. The only problem is the exact same problem that we have with BlackBerry, that we had with Radio Shack, and that these things are massively shorted. This one actually has given up almost everything that it had and bounced today. Not a good sign. Lots of volume, but you still have 25% short interest on these things. The problem is ever figuring out when these things do break, and they can go for years, just like BlackBerry. It can move things around. It can sell things. It can change the things. And all they do is make sure that the CEO gets some huge, massive pay that he does not justify for years at end. And then, of course, it goes into bankruptcy where lots of lawyers charge huge amounts of money that they can't justify until there's nothing left of the rotting corpse of the company underneath it. Now, is Tesla a zero company like BlackBerry or Radio Shack? The answer is no. I keep on looking at the growth rate and everything in it, and it's a $40 company. So trading at $200, worth $40. Not uncommon to see haircuts, even like Amazon we talked about in 2000 that went to a tenth of its price. This I'm only saying is going to go to maybe 25% of the price, or maybe 20, something like that. That would be a fair value to buy it at, and then see it grow over a number of years. But you've got and continue to have 10 years of growth already priced into this company, and I just don't see it. We'll be back after the short, very tiny. What are you?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're going to get to a couple of questions in the den, but I've got a caller first. It's Jack from Palm Beach. How you doing today,
Dave.
Jack? Good.
Doing great. How you doing?
What do you want to talk about today?
I'll tell you what, this is, I'm sure, a very basic question, but I'm short quite a few positions and looking for a few more.
Mm-hmm.
I see that the IWM is significantly underperforming.
Right.
And so if you were going to short an index, would you take the one that's already down 2 or 3% ahead of the others, or because it's the weakest, or would you short one of the other indexes because it hasn't?
I would try to find the next week. Yeah, I'd try to find the next weakest one. I can't short something that's already left the barn.
I get it. I totally get it. Yes, I understand.
I can't chase. In full disclosure, we have a big short position on the IWM in the daily newsletter. But that had to start back at 120. That had to start back at 125. It doesn't start today at 119. Right?
Exactly.
So, we went with the puts.
Mine are about 122 or 2.5.
Yeah, that's fine.
I already have.
Yeah.
Not as good as yours.
That's fine. If I don't get the ability to make like 30% on my money, I really don't. It doesn't mean I will, but I've got to look at that as a proper target for almost every trade I have. Huh?
Yes, I understand the risk-reward concept of it.
Yeah. So to me, that's not it. I think we're getting ready, maybe in the semis.
I see.
SMHs. Let's take a look at those today. I haven't looked at that. I think you can get kind of close. You're really you're just looking for any close below a 9-day moving average now on the SMHs, and you'd have some big deal. There's some other things out here in that sector, but I would look for the secondary stocks that are starting to look weak, then try to go short now, the IWM.
And you prefer the sectors rather than the indexes?
Well, I think you've got a edge. I prefer this. I prefer equities first, ETFs seconds, and indexes last. Because if you can find the weakest stock and short it, or the weakest sector, that's the best, right?
Yes.
I mean, you're gonna get far more performance than that. So, to me, my model has always been and early has been that 50% of a stock's movement is going to be the broad indexes, about 25% is going to be the sector, and about 25% of the stock. So if you can get the stock and you get the sector and you get the broad indexes, then you got the hat trick of everything. and that's where you make pretty much the huge money. Sometimes you can make some money by just being right on a single index like the IBB, stuff like that, even when the markets are going sideways for the most part. But it is so much sweeter when you get all three of those together, and that's kind of what you want to look for. It's not always perfect, but that's what you hope to find. Sometimes you just have to find the weakest of the bunch and make a determination on that. But I think there's more than a few stocks out here that I would say there's a 50-50 chance of them going lower.
Mm-hmm.
But if they're going lower, they're going fantastically much lower. And if they're going higher, they're going very slightly higher.
Right.
So in the SMH is
5% versus 20% concept.
Yeah. So in the SMHs, maybe it gets back up to $70.21, but I'm figuring there's an equal chance that it goes down to 60. So to me, that would be the proper risk reward in some kind of setup in that. And of course, as long as these guys continue to pass out like the VIX at 14 and other things out here, like there's absolutely no risk going lower.
Yes.
I love puts.
Yes. Yes.
So,
I'm not an option trader, sadly, and that's a huge advantage there. I know. That's
that is it. But there are a lot of sectors out here that are like a day away from giving us some signals. But to me, have you been listening to the show for a while?
Yes, I have.
Okay. To me, the most and biggest indicator out here is the market is going to follow the TLT. We're probably going to. I was looking for the big gap down on this, and we kind of, kind of. So you got the big blowout on it. So that sets up the 128 as I think, kind of a foregone conclusion. We certainly are going to get the 9 million shares from the 131.12 of June 23rd. Volume has been increasing for the last 4 days as we go down. But my guess is that this was all about one thing, what I was going to talk about, and that was pushing the biggest IPO of the year out today. That was, what's the name of that thing? ZTO. This is a stinky IPO that had been tried to be pushed out for 3 weeks. I didn't even know it was coming out today. In the dead of night last night, somehow they got the thing priced. It went out at $19. It's now trading at $17, and it was $1.5 billion to a Chinese company that delivers stuff for Alibaba. And there's literally no way to figure out what's going on at all. The books are dubious to me at best. And I thought, if you're going to push out a big stinker like this, you got to hold the market up. And I kind of think that may be it. I'm looking at today's close and tomorrow's as being the icing on the cake of potentially a very medium term and maybe possibly a long term high in the markets.
That makes perfect sense. And you mentioned the VIX. Do you ever, I'm sure you use options instead, would you ever trade the TVIX?
I don't. I'm more of a UVXY kind of guy.
I see.
And sometimes I do the ETF, sometimes I do the options. I think the last time we did the
lows right now, I know.
Yeah, last time we did the options, the ETF, I think I got $17 to $23 out of it, and then did a $1.40 option that expired worthless. So it's the way I'm looking at it, I'm still up $4.60.
Not too shabby.
Yeah, the options are a great way of trading that, especially at these low VIX. But on options, I know that day is going away. If I'm right and the market's headed lower, then the VIX will explode. The implied volatility on all these stocks will implode, and getting a winning options trade is going to be incredibly hard. I've kind of lived in a Goldilocks world for the last 2 years in that I was able to pick some of the huge winners and make some pretty big money. It's like the IBB. Those options that I got, and I'm not going to get those cheap prices again, right? And
well, I know
think
you've done beautifully with a lot of those trades this year.
Yeah, so, at highs, when you get the right sector and everything, options are great. they'll become problematic. Once the market really starts going down, they become so expensive it is almost impossible to win. So I'm kind of looking at maybe the last few options I may be buying for a while if I am right on a longer term downtrend.
Well,
Do you
thanks
have
so
any
much
other
for your
questions?
help. No, thanks for your help. I appreciate it.
Thanks for the call. We'll be back after this short timeout.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had a question in the den about Amazon. Would you wait for this thing to spike to short it? And I don't think so. Again, this is my theory on stocks that traded at $800 and stocks that traded at $100. Netflix, you get a jump, a big spike out of it. But because a lot of people are literally short the index or short the equity itself, not a lot of people shorting Amazon using the equity to short it. They may be buying options, but you can't make people buy stocks because the options go against them, right? It doesn't make any sense to push the price up. So if you're going to squeeze a stock, you're squeezing stocks probably below $250. There's just not a lot of reasons to do it. But at the same time, it's kind of easy to move a stock like Priceline $50 up or down. That's just because there are not that many people standing on the opposite sides of trades with $1,500 a share stocks. So to me, the signal, and we brought it up back here as we were going into this 847 high, that was the big men of the street were shorting this thing into that 847 high. For the most part, I can tell there hasn't been much shorting after that. It makes me think that some of the smarter guys out here on Wall Street kind of figured it out. They think that this is a good place to park their money for a while this thing pulls back. There's not going to be a lot of surprises. Amazon doesn't have anything that they're going to release that's going to turn lead into gold. Maybe they lose a little, but I think they think that there's a much more bigger opportunity to have this thing pull back decently and still be in a bull pattern or bullish pattern out here. But I think that they are looking at this. They may be just hedging some of the bigger part of the market out here or some of their longs doing this. But when you're short and you're a big hedge fund at $800 stock, what you don't have in it is a bunch of goofy rubes out there that are shorting $10 stocks that go to 20. Maybe this thing goes to $1,000. I don't think it's going to, but for the purposes of our examples, maybe it goes to $1,000. Well, they could lose 15%, right? That's the way they're looking at it. You know, could they get blown out on a big Amazon move? And the answer at 6% margins is not. Apple could have sold 5 million more cell phones and blown out earnings and seen 20 or $30 higher, right? It could have just had a huge run. I didn't think it was going to happen. There was no evidence it was. But when you have huge margins, the ability to print cash, which is basically what software and some hardware is that. So if this week has any theme to it for me, it is margins, 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 whether it's Amazon on the low end of margins and, of course, Apple on the high end of margins, Apple, Intel kind of things with those huge, huge margins. But both of them you kind of have to watch, but for different reasons out there. One question or one comment was about Tesla early, and I think the whole Musk thing is starting to turn. South Park started to go after him last night. My guess is that you're going to start seeing a lot more poking gentle fun at Mr. Musk, at his pie-in-the-sky Mars ideas. As I said before, the whole idea that we're all going to become mole people on Mars, probably a little ridiculous. You know, this is not a slight problem of going to Mars. It is as big as going to the moon was in the 60s, and nobody is putting those kind of resources behind it at the moment. So a lot of well-wishing stuff. Easy articles for the prostitutes in the media. And I don't know what else you can say about it other than that. We will see you. Same bat channel, same bat time tomorrow. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.